Okay, we're on the next lesson, execution. So that's the next part of this trading system is actually now executing the ideas. So we generate ideas, we did analysis on the ideas to find the best ones, right? And now it's time to enter those ideas, execute them. So lesson's pretty straightforward. It's actually very simple. It is very simple because this is just very mechanical. So I have a quote and a rule, both a quote and a rule. So let's start with the quote. A great strategy means nothing without precise execution. And that's so true. So fucking true. You know, doesn't matter how good your idea is. Doesn't matter if you have 10 fucking good ideas. If you execute them, if you're sloppy with execution, you're not gonna make a lot of money. And I see this over and over and over again. I see traders who are literally trading the exact same trade, but one has sloppy execution and the other one is precise like a fucking sniper. And the sloppy guy gets out for break even, and the sniper, because of good execution, good value, good position sizing, ended up with 2R. I see this all the time, you know, and it doesn't come down to idea, it comes down to execution, right? Obviously, you need to have a good idea, right? But if you give two traders the same idea and one is sloppy and the other one's precise, man, it's game over. Like, you got to be precise. You got to think of it. You got to think of execution like a sniper. You're waiting, 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 and once it meets that criteria, you're in. If you hesitate, you can't hesitate. That's the thing. You can't, because again, the rule is very simple. What is the rule? Enter on a trend change in the value area. And why do I say you can't hesitate? Because you already done your analysis. See, the funny thing about execution, here's the peak performance part of this lesson. The funny thing about execution is that people make these great ideas. It's like a legit trade, very nice trade, as good as it could be. As good as it could be, backed up by analysis. And it's like literally legit. But people still fuck it up because they doubt it, they question it, they hesitate at the time of execution. It pulls back to value, it triggers their alert. They should be entering the fucking trade, but something's going in their head and they got doubt, they got fear. And they don't take it. And it falls to target. I see this all the time. All the time. And they start thinking again. But the thing is, when it comes to execution, there's no more thinking. There's zero thinking. There should be zero emotions because you generate the idea. And let me give you some context. If I'm swing trading, and this is like a swing idea, we're entering a swing idea here in our example. Okay. So if you're going to be a swing trader, you might be scanning 100 assets in a month, maybe 200 assets, maybe 300 assets. On a given month, I probably scan about 300 assets. Forex, crypto, commodities, stocks, ETFs, I can scale probably 300 things. And out of those 300 things, 300 assets, maybe more, but out of those 300 assets that I scanned, I might come up with a list that's 30 ideas. I might generate 30 ideas. And out of those 30 ideas, by doing analysis, I might find 10 that are really good. And out of those 10 that are really good, maybe only 5 pull back to value and give me an entry. You scan 300 to get 5, So realize that you did a lot of work to narrow down and find the best fucking trade. That work's already done. So once that is done and you scan 300 assets and you found five fucking ideas that are like legit, that are pulled back to value. You had more, but these are the 5 that were great and pulled back to value. If any of them presents an entry, trend change in the value area, if any one of them gives a trend change in the value area, you shouldn't even be thinking. It's like press the button and go short, enter the trade. There's no more thinking. The thinking was done. Where was the thinking done? The thinking was done in developing your plan, in developing your execution plan, in developing your system. You already thought about the system. You already thought about the execution plan. You know how you're entering this trade. Okay? You don't need to think about how to enter it. You've already done that thinking prior, right? Right now. Like you're doing the thinking. And by the end of this program, you're going to do your own thinking. And there's going to be no more thinking to do. When it's time to enter, there's no more thinking. That shit's done. You know what I mean? And same thing for the analysis. You already done the thinking. You already made your analysis. Out of fucking 300, you found 30, you found 10 of the best, and these 5 pull back to value. You already done your thinking. You've done your analysis, right? But people still freeze at the time of the execution. And I just wanted to remind you that you can't. You can't. It should be very mechanical, and it should just be based on that rule. Enter on entrench in the value area. Because that's the process. That's the step. There's no thinking here. When it comes to execution, there's no thinking. Thinking is not a step in execution. All right? It is an analysis. It is maybe an idea generation, but even idea generation is very straightforward. And even analysis, once you get the flow of it, is very black and white, you know, because the thinking was already done prior by building the plan, by building the system, by understanding the system, you know. So all of these steps, to me at least, they're very black and white. It's like, that's how I do my list. That's how I organize that list. That's how I make sure the list is good. And when those good status pull back to value, I enter on a trend change. You know, it's very black and white. So you need to treat it as such. And that's why the rule is very simple. And it's just one rule when it comes to execution. There's not 2, there's not 3, there's not 4, there's not 5, there's 1. Enter on a trend change in the value area. All right. So there's a few things to talk about. We can talk about order types and uses. We can talk about platform proficiency. Let's talk about these real quick. Order types and uses. We got a few different order types. These are from the broker side, you know, when you're actually placing the trade. There's market orders, there's limit orders, there's stop loss orders. There's a few others. Okay. We're going to be using these ones: market order, limit order, stop loss order. Mainly those 3, you know, all the time. So you'll get used to it. I'll show you what they look like on the charts right now. It's very simple. And platform proficiency. That's the next thing. You got to learn how to use your platform. So every single broker has a demo account you can set up, right? Where you can try placing positions and getting used to execution. When it comes to the technical side, the platform side, you got to get really quick. You know, so you got to understand your software. You got to understand your tools, right? So this is kind of like, now we're getting to the broker side of things, right? And every broker is a little bit different, right? But it's all the same shit. It's all the same order, but this platform might look a little bit different. So you just got to get used to the platform. You know, you got to get used to the execution platform. I'll show you how to do it in TradingView though. But this is kind of like the lesson where you now need to start really kind of like getting used to your broker platform. All right. And we're going to talk about position sizing and risk. We're going to talk about max entry, ideal target, ideal stop loss, and precision on execution. Okay. So let's go to our examples. And I want to look at our example again. Right, so we already did our analysis. We know this is an idea. So I want to focus on this, position sizing. All right, position sizing. What I'm teaching you is a base plan. With base plan, we're going to dive more into this in the strategies. The strategies are the complete system. Okay, so each strategy pretty much is a complete system. But when it comes to the base trading plan for every single strategy, we're looking for 2-to-1 position sizing. So we always want to be aiming for 2 and risking 1. Okay. And there's a few things that we need to be doing, right? So when we look at our points, when it comes to position sizing and risk, right under, we got to identify the max entry point, our ideal target, and ideal stop loss. Okay, so let's do that now. Where do we want to enter? Where we want to enter on a trend change in the value area. So where is the value area? Where value area to me is 0.382. Is roughly this area here, around 0.382. That's the value area. Now, sometimes it can go higher. So between 0.382 and 0.618. But sometimes when a price action pulls back to 0.618, the idea looks really bad, right? Because all the levels were already broken, right? Like here we have all the levels. So value area is kind of like close to the levels, right? But it needs to be around 0.32. A little bit below is fine, but it needs to hit it, right? It needs to be around 0.32. So price action needs to retrace to 0.32 Fibonacci retracement. And that's the value area. Okay, so enter on a trend change in the value area. Anywhere here. It can be a little bit higher, right? It can be a little bit lower, but it needs to kind of pull back and hit these levels, right? So we want to be entering somewhere here. And the entry could be a little bit lower. So we're trying to identify what is the max entry point, ideal target and ideal stop loss, right? So ideal target will always be 1-to-1 to the bottom or better, right? Which in this case, it's already good. And 2-to-1 down to S1. So a lot of times it's trading from the main pivot back down to S1 or vice versa, from trading from the main pivot back up to R1, right? So this is kind of why we use the pivots, mainly for execution purposes and position sizing, right? So we're going to be entering around the pivot around 0.32 Fibonacci, right? This area. And we want to target S1. And we want to make sure that's a 2-to-1 position. So I always start with where do I want to enter? Okay, in this area. Where do I want my stop? Where do I want my target in this area? Okay, where does my stop loss need to be 2-to-1? Something like this. So then I like to just even out the numbers. So it's 2100 and 105. So 210 pips and 105 pips. Okay, and this is my base position. Now I can enter a little bit higher, right? Something like this. This would be like ideal. Ideal is like right on 0.32, stop at 0.618, and target a little bit better, right? But max, what is our max? Max is like right here. I don't really want to enter any lower. If I enter any lower, now I could maybe enter lower, but this is kind of like where shit gets tricky. All of a sudden, I can't get my 2-to-1 position, or I can, but it might be tight, you know? So this may not be optimal. And a lot of times, this is kind of what I call sloppy. Some people will be like this and try to make this work. Like this is just sloppy, right? Very sloppy. And you'll learn through experience that this is very sloppy. And the one who enters with precision is just a much better trader, you know? So you got to always think about precision. You got to have the patience for price action to pull back to your value. Right, so that's kind of what we're talking about here. When it comes to position sizing, base plan always 2-to-1. You got to identify the value area. You got to enter around the value area. Your stop needs to be protected by all the junk, right? So it needs to be above it. Your stop cannot be tight. Your stop needs to be above all the junk, right? That's kind of like when we're thinking about all these lines, all these levels and stuff, think it about as junk. It's shit that price needs to get through in order to hit your stop loss. You want to have as much junk as possible there. That price action needs to go through in order to hit your stop loss. And when it comes to the target, it should be pretty clear. That's why we're bouncing off of these levels and we're just continuing the trend. And the target's pretty clear. We're not really trading through anything. You know what I mean? That's the goal. We're entering on the bounce. Stop is protected by all the junk, by all the levels, and target is good to go, right? And we're identifying max entry point, ideal stop loss, and ideal target for a 2-to-1 position. I think that's it for that. Let me talk about risk, right? So this risk here, actually, I'm going to talk about risk in a second. So let's move on to the next part, which is precision on execution, right? So we got our position size, ideal stop loss, ideal target, and now it's precision on execution. So we need to be precise. So what does that mean? So we do this as we're making our watch list, right? We're getting prepared. And now we got to wait for price to pull back to our value, right? And we're going to have like an alert here. Anyway, so for some reason I can't place fucking alerts. But anyway, price action is pulling back, and as soon as it hits the value area, I want to watch it, right? And I always like to see it on all time frames, right? Oh, one thing I wanted to say. Execution, we position size on this, we position size, but these are our execution time frames. Why? Right? Well, because it's the same thing. We're going to be looking for this rejection here, right? And once this rejection is happening, we believe that this is a new run, right? We believe this is a new run. A run on a higher time frame is a trend on a lower time frame. And if a run is ending and a new run's beginning, a trend should be ending and a new trend beginning, right? That rule from previous lesson. So, if it was a bit loud in here, I had a vacuum walking around. Anyway, so based on that rule, we believe that a new run is starting here on this daily chart. So therefore, there should be a trend change on the right. So these, the right-hand side, we call it our execution and management timeframes. So this is where we enter positions, okay? And I want to explain these a little bit. On the bottom, this is aggressive execution, okay? Aggressive execution. Middle, regular execution. Top, conservative execution. I tend to fall more into the aggressive execution type. Okay. Regular is good. Conservative, I'm not a big fan, but sometimes it is fine. Okay. Sometimes it is fun. Fine. But these are our execution timeframes, and they're also our management timeframes. But there are execution timeframes. So now we're kind of waiting for this time frame here, the bottom left, the daily, to pause, hit the area, and start a new run. And therefore, we're waiting for the trend change to happen on the right. So I'm just watching the right. Boom. See that? Now that one really quick, really quick. Let's slow it down a bit. Let's jump back up. Let's try it again. Slow it down. Okay. Check this out. Play it. And I'm watching these execution time frame, right? So it's pulling back to my value area now. You see that? And I'm just waiting to give me a trend change in the value area. And this is a 10-minute chart, right? So this is every candle is 10 minutes. So you have time. You have time. But every candle is 10 minutes. And for day trading, it could be quick. For day trading, it could be like 5 seconds, 1 second. Boom. It broke down. That's my trade. That's my trade. So sometimes now I need to reposition, right? Because this is my entry. So if I'm entering now, well, I gotta potentially this is fine. It still fits. It still fits. It still fits. But this is kind of like where I can adjust a little bit, you know, right before I enter. Take a minute, take a second, just adjust my position a tiny bit, So I'm gonna target 200 pips and 100 pip stop loss. And I'm gonna go short. Remember, this is the 10-minute chart, so you got like 10 minutes. You got like a couple minutes to just readjust. And now I'll be placing a market order. Okay, a market order. So what the fuck does that mean? But you see what I explained here? Enter on a trend change. So you see how it pulled back to my value area, right? So pull back to my value area, it hit 0.382 Fibonacci, it hit pivot, and it hit my value area. And now a new run is going to be beginning, a new run's beginning, and therefore there should be a new trend beginning, right? And the aggressive entry happened on a trend change, right? So pull back to value, and then there was a trend change, right? And that's my trade. Trend change and the value area. No, in this case, it's aggressive. I could wait for a regular, right? But like I said, I typically take the first entry. A lot of times it's the aggressive entry. So that's my entry there, right? Now, how the fuck do you actually place this trade? So this is kind of where you go to your broker, and that's kind of where we're talking about the first 2 points: order types and uses, and platform proficiency, right? So let's look at that for a second. In TradingView, you can connect your broker, okay, to TradingView. But you can also set up a paper trading account in TradingView. But you can connect some brokers. I don't like connecting my broker to TradingView. Why? From a security perspective, people are fine. I think it's fine, but I like to just. I have my broker on my phone. I do my analysis on here. I have my broker on here, and I just go and place my trade. You know, I don't like connecting my broker to third-party platforms. I just don't think they should have my data. You know, so I don't do it. But it's totally fine. It's cool. You know, I'm sure it's safe, kind of thing. But that's just my take. But TradingView allows you to have a paper trading account. You can also connect your broker to it and so on, right? But it's a good way to practice trading. It's also a good tool for position sizing, okay? Because you got to figure out how much this needs to be. How big is this position? So this is a euro dollar trade, right? And here we have our order window. And every single broker has an order window. And if you connect your broker to TradingView, you can trade off of this window. But this window also gives you the position size. So check this out. We got a market order. Market order means that you're entering price action live. As price action is moving, you're entering right there. And that's a market order. A limit order is typically, price action needs to hit a specific level in order for it to be triggered. So I put a price here. And if this price gets hit, then the limit order gets triggered. Okay? You can do a simple Google search on this. But most of the time, we're going to be entering on a market order. Okay, so kind of like entering live as this is happening. Like right now, we're entering live, like right now, as an example. So we need to figure out our risk. So this demo account is a $100,000 account. Okay, it's a $100,000 account. So, and let's say you want to risk 1%. Okay, so what is 1% on 100 grand? $1,000, right? 1% on $1,000 on 100 grand is $1,000. So you want to risk 1% as an example to start. Eventually, you might be risking 2, 3, 4, 5% based on the lessons that we talked about earlier, right? But you want to start off risking 1. So what does that mean? So that when price action goes and hits your stop loss, that's not more than $1,000. So how big is your stop loss? Well, your stop loss is 100 pips, right? So my stop loss is 100 pips. And what's my take profit? Well, I want my take profit to be at 10716 or 200 pips. Current price is obviously a different price. Let me do something for you here. Let me pretend this is a limit order, right? I'm just going to put some numbers in here, then I'll explain it. Okay. Perfect. Check this out. So I'm entering at 10916, right? So price is 109160. Um, you can enter with limit orders too, roughly. So price is 10916, right? That's kind of where I want to enter. And I want to have a 200 pip target at 10716. And I want to have a 100 pip stop loss at 10116, right? That's exactly our position. And you can see these numbers here. Pause and study for a second. There you go. You can see that nice and big now, you know? So, and if I want to risk 1%, I got to sell 100 units. If I want to risk 2%, I got to sell 200 units, based on this position right there. And if I want to risk 5%, because you're an experienced trader, like myself, I risk 5% now, then you want to sell 500 units. And that's a $5,000 position to make 10,000. Potential loss is 5 grand if your stop loss gets hit, and you'll make 100 grand or 10 grand, sorry, if target gets hit. And then you place that order. Where is this order? There it is. Right, so that's kind of what it looks like. Right, so you can kind of like look at this chart, and this is how quick it's done in TradingView, right? So this is literally it in TradingView. Like you're deciding where you want to enter, where do you want your target, where you want your stop loss, and then you fill it in and then you sell. How much you want to risk, 1%, 2%, 5%, 4%, right? And you just fill it in. It's simple, right? And then you go short, right? And you can use limit orders. A lot of times we're going to just use market orders, which are a little simple, a little simpler. There's less to fill out because as soon as you press, you just short. So as price action is moving, as soon as you press this button, it just triggers. So all you got to really fill out is take profit and stop loss, right? And just make sure that your risk is not more than what it should be. So if you're risking 5%, it's 5 grand on 100 grand, right? And then again, you just press sell. It's just going to trigger me right here, trade because this is where price is. Market order just triggers you where price is, So price is down here, so this order was triggered, and then I'm just going to close it for a loss, right? Or for break even. But this is the idea, right? So you want to make sure you're never risking more than 5%. You want to start off with 1% and get yourself to 2, 3, 4, 5% risk eventually, but you want to start off with 1%. This is kind of what it looks like from the moment of entry to where stop loss gets hit. That should not be more than 1% to start. And then, yeah, it's pretty straightforward. This is the execution part. And like I said, you can connect your broker to TradingView, so it's very simple and easy. But most brokers, it's easy like this anyway. And if this is complex to you, I mean, you'll get it in a few tries. You got to try placing some trades. This is kind of like where the first 2 points of this lesson is. If you sign up for a broker, like just read their documentation, watch their videos, watch their execution videos, just like study the broker, right? Study the platform, right? Get good with the broker platform. And then TradingView is very simple. So you can always connect your broker to TradingView, and it's very simple. You can just do it all right there within seconds, but it's typically that simple within your broker too, But position sizing and like the execution part, like the technical side, the software side is very simple. It seems complex. It's not. TradingView does all the calculations for you and all of it. you know. There are apps, calculators, position size calculators. You can Google it, position size calculator app, right? And if you don't want to use TradingView to get your like position size, how many units you're gonna sell or buy, right? You can get one of these apps, right? Yeah. Set up a demo account, take some trades, practice before you trade real money. Don't spend too much time on a demo account. A week is good. Play some trades, and then once you know the platform and know how to position size properly, you don't want to over risk. So you got to learn the platform. You got to learn, make sure that you can, in high stress environments, execute quickly, and that is just, you got to understand the platform and how to position size real quick, right? Because when it comes to execution, again, it should be very mechanical. It should be like driving a manual car. You just know what the fuck you're doing. You shouldn't be sitting here and be like all confused, So this is kind of like where some practice comes in. Learn to use the platform, learn position sizing, and learn the execution, right? But when it comes to a rule, it's simple. Enter on a trend change in the value area, and you should have everything figured out. There should be no thinking here, okay? Because it just needs to be a quick, snappy decision, and that's the peak performance side of this lesson, right? That is it for execution. I hope that all makes sense. Enter on a trend change in the value area. I'm going to show you more examples and put it all together under the strategy lessons. But after this, we're moving on to management. So I'll continue with the same example. See you in the next lesson. Bye-bye.